Hey everyone, welcome back to Corporate Decoder. Today, Man just filed a current report announcing their quarterly results, and there is a massive surge in their stock we need to unpack. Quick note, this is not financial advice, just my take on public filings for educational purposes. ManpowerGroup stock is absolutely flying after their latest earnings announcement, and we're going to dig into what is driving this excitement. So this is a Form 8K filing, which companies use to announce big news that investors need to know right away. In this case, ManpowerGroup is reporting their financial results for the second quarter, which ended on the 30th of June 2026. The main point of this filing is to share their performance numbers. They put out a press release on the 16th of July 2026, officially announcing their earnings for the 3 and 6 months ended the 30th of June 2026, and comparing it to the same period in 2025. We don't have the full press release details in this document itself, but it is attached as Exhibit 99.1. This usually means it contains the nitty-gritty numbers, commentary from management, and guidance for the future, given the recent news headlines about ManpowerGroup stock surging and beating earnings estimates. It is clear this press release contains some very positive news, looking at the surrounding context from financial news sites around the 16th of July and 17th. It seems ManpowerGroup reported a Q2 earnings beat, meaning they made more profit than analysts expected. Headlines also mention their revenue surpassing estimates and year-over-year increases with growth accelerating. One headline even suggests the recovery is now supporting earnings growth, which is pretty significant in the current economic climate. This is exactly the kind of information investors love to see. For context, ManpowerGroup is a major player in the staffing and employment services industry, and their common stock trades on the New York Stock Exchange under the ticker symbol MAN. The company has a market cap of around $2.4 billion and employs a significant number of people, over 25,000. This recent surge has pushed their stock price up, with its 52-week range showing quite a bit of movement and current price hovering near the high end of that range. The filing also lists the exhibits, which are the supporting documents. We see Exhibit 99.1 is the press release, and Exhibit 99.2 is the presentation materials for a conference call that likely happened on the same day. This is where company leadership would have explained the results in more detail and answered questions from analysts. Finally, the report is signed by John T. McGinnis, who holds the title of Executive Vice President and Chief Financial Officer. This is standard procedure, confirming the company is officially submitting this information. Now, let's connect this filing to the bigger picture we're seeing in the news. The fact that ManpowerGroup is reporting strong Q2 results means their business is likely performing very well right now. In the staffing industry, strong results usually signal a healthy job market, with businesses actively hiring and needing temporary or permanent staff. This is fantastic news for the company, and of course for its shareholders. The market's reaction, with the stock price surging, shows that investors are impressed with these results. Sometimes a company can report good numbers, but if they do not meet the very high expectations set by analysts, the stock can still fall. In ManpowerGroup's case, it appears they not only met but exceeded expectations, leading to this significant positive price movement. When you see a stock surge like this after an earnings report, it often points to several key factors: strong revenue growth that outpaces costs, improved profit margins, and positive forward-looking guidance from the company indicating continued strength. The mention of growth accelerates in the headlines is particularly encouraging, suggesting this isn't just a one-off good quarter, but potentially the start of a sustained upward trend. One thing to keep in mind with companies in the staffing sector is their sensitivity to economic cycles. When the economy is strong, demand for temporary and permanent workers increases, boosting ManpowerGroup's business. Conversely, during economic downturns, companies tend to cut back on hiring, which can negatively impact staffing firms. The fact that ManpowerGroup is seeing accelerated growth right now suggests we are potentially in a period of economic expansion, or that the company is successfully navigating any existing economic headwinds. The top institutional holders listed, like BlackRock and Vanguard, are major investment firms. Their significant holdings mean they have a vested interest in the company's performance. When these large players see positive results and a stock surge, it often reinforces their confidence and can lead to further investment, creating a positive feedback loop for the stock price. The P/E ratio of 23.6, while not extremely low, is reasonable for a company experiencing growth in its sector. This suggests that investors are willing to pay a premium for ManpowerGroup's earnings, anticipating future growth. The 52-week high to low range also shows that while the stock has had its ups and downs, it is currently trading strongly, reflecting the positive sentiment driven by these recent results. So, what is the takeaway here? ManpowerGroup has delivered a strong second quarter, exceeding expectations and signaling robust performance in the employment services sector. The market has responded favorably, driving the stock price higher. This filing, supported by the surrounding news, paints a picture of a company firing on all cylinders, likely benefiting from a healthy economy and effective business strategy. The biggest unknown is whether this growth can be sustained, but for now, the numbers are pointing upwards. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.